real smart money will be moving into gold because they know that the dollar can't last forever, and it's not. So you'll see them both move together for a while, and I think once the dollar starts to lose relative.
All right, StockPulse on location, PDAC 2020. I've got with me David Morgan, the Morgan Report. David, always a pleasure to pick your brain a little bit here. I'm in the air Friday, and when I land, I get on my Kitco app, and all hell had broken loose. Why don't you talk about Bloody Friday there, and how do you see the markets?
Well, I got a few emails from my subscriber base, go down heavily on Friday. I'm not that concerned. I mean, obviously it was a big day down, and it concerns a lot of people. Technically, the 1550 levels was important, and I don't know how many trading days. When I get home, I'll probably make another video for my members, but I think we're only looking at about 12, 13 trading days or so where we got above the 1550 level, started to march up, moved up over $100, and basically on our very, very short-term basis, Rob, we were parabolic, which is a signal of an overbought market, and a lot of it had to do with this, current news with this virus situation. And that's all the way, markets should react. And the general stock market continued down. I think a lot of technicians thought it was about done. There'd be a bounce up and things would kind of level off. It's not what happened. The general market started to continue downward, and so a lot of mainstream financial press like Bloomberg and many others put out what normally happens, which is that these guys are heavily in the stock market and over leveraged, and almost all of them are. They get a margin call, and the most liquid thing in their portfolio is their gold position. So gold starts to sell so they can meet margin calls. So that's part of the story. The other part of the story, I think, is that short-term traders see that parabolic move. They see how much is there. They know gold's probably one of the most liquid assets available. You want ready cash, that's a good market to go to. So they see it start down, they pile on, their algorithms give them a signal or whatever, and away we go. As of this morning, we're already back up in the gold market, not substantially, but a good bounce. I'd actually like to see a Fibonacci retracement. I know all this technical stuff and don't pay attention to it nearly as much as I used to. But if you got a 50% recovery today, that would be very, very bullish for the gold market. So if you're off $60 and up 30 the next trading day, that's extremely bullish. If you're off $20 and up 10 the next day, it's very, very bullish. Just to stabilize after day, that's kind of normal. So we have to see a little more trading to get a handle on this. The 1550 levels, I said, is critical. Silver, of course, outperformed gold on the downside. I think it was a 3% move on gold, like 6 on silver. Silver bugs are really getting restless, and I don't blame them. I mean, silver just has not performed. And I've been saying for quite some time, so I've tried to remain consistent, that you're going to need gold to pull silver up this time. I've been convinced of that for quite a while.
Where do you believe the silver gold ratio should be? I mean, obviously we're at what, 90 something or 80 something to 1.
Yeah, pushing 100.
I mean, you can argue the 16 to 1
it's
thing.
really tough to say where it should be when silver's been demonetized since 1873. So, 120, 30 years, whatever it is. People have been taught to believe silver isn't money, although there are a few of us that think that it still is. And the word silver and money is synonymous in all the Romance languages. But regardless of all that fact, silver doesn't act like money. Where should the ratio be? I'd say if the ratio was where silver was thought of as money on a wide basis, then the ratio would probably be the monetary ratio, which is 16 to 1. If it was able to assert itself primarily as an industrial commodity that had investor interest, like palladium, and then it could really shoot. And silver's not as small a market as palladium. I'm not even suggesting that, but I am suggesting it's a small market relative to the gold market, and a small market relative to all other asset classes outside of the subset of the precious metals. And if you go to gold, silver, platinum, and palladium, those two markets are the smallest. In fact, I don't even know why they're on the commodities exchange, to be honest with you. They're such small markets. But gold on a global basis is about 1% of the total financial assets worldwide, and silver is 0.02%. So you think in a bull market in gold, do you think that from 1% you could get to 2% of the people based on virus or stock markets or uncertainty with your government or food shortages or weather problems or infighting between the divide and conquer modality where left versus right or up versus down or whatever. I mean, there's so much turmoil going on. I think it's almost a slam dunk that you could see 1% of the world's assets in gold going to 2% quite easily, if not 3 or 4, maybe 5, I don't know. But I think it's easy. So if you can think of gold going from a 1% asset holding to 2%, and I certainly can, then what do you think silver could do at 0.02%? It could go 5-fold, it could go 10-fold, and it's a lot cheaper asset than gold. So when gold takes off, it gets into that wherever, 2,500, 3,000, I don't know, but the idea is very sound. There's a level where most people will go, oh my goodness, gold is too expensive. Half my life savings buys 2 gold coins. So they'll move into the silver market. And that's why I keep saying I think gold will have to drag silver up. But once that starts, silver can become a feeding frenzy. We've seen that several times in my lifetime, where you start to get momentum builds on momentum. And you think this parabolic move that gold did recently, where you went from basically 1550 to 1670, and that's a one-day move. It does those 4 or 5 days in a row before you get a pullback, a correction, whatever you want to call it. So I'm looking for big moves ahead. I think we're in the last final phase of a major bull market. I think it's going to continue for a few years. And once that top is established, if I'm right, and I think I will be, then we're going to have to kind of reevaluate, take some profits, and look, where do you put these profits? Because that may be a challenge.
Yeah, well, you mentioned all the reasons to have the precious metals, but I think one we didn't talk about is the Fed's stance. I think they've telegraphed negative interest rates probably, and there's no reason to save anymore, but yet the dollar still hangs in there. Is it just the best house, bad neighborhood scenario again and again and again?
I think it is. I mean, all fiats fail. I think I've said for many interviews that I see the dollar and gold going up together, which you've seen recently. If you look at the extra liquidity pyramid, which is going from very risky assets to the most coveted, and the most coveted asset really is the U.S. dollar. I mean, even though gold is actually the most at the end of the cycle, the dollar is the one that people pour into because that's what's happened in the stock market. You're moving out of a stock into cash.
Where else can you
moving
put
out
$1
of
billion
gold into cash? You want to go to cash. So the dollar will actually have a lot of buying pressure on it and will rise up relative to the other currencies, as you mentioned. At the same time, the real smart money will be moving into gold because they know that the dollar can't last forever, and it's not. So you'll see them both move together for a while, and I think once the dollar starts to lose relative to gold, so you could have the dollar moving up on the dollar index, but the gold moving up far higher in terms of dollars, and I think that will be the case. Then there'll be people that hold dollars that have gone liquid that have dollars saying, you know what? These dollars are losing value relative to gold. I want to move some of my dollars into gold. And that's when the run to gold will take place. So that's how I see it. It's pretty easy to look at history and make that case. And the difference between then and now is worldwide communications, instant communications, this type of interview where people have access to it globally. And so it could take place a lot more easily, a lot more quickly, and with a huge amount more participation. And the other likelihood is the internet-based precious metals dealers. I mean, you don't have to find a dealer in your neighborhood anymore. In some cases in the 70s, you'd have to make a phone call, do a wire, get a check, make sure the check cleared, and then drive to the next big city, put it in your trunk or whatever, and drive it home. Now you can use a mouse, you can click it and say, ship me my metal. So there could be a run to gold that hasn't ever been experienced before in history.
If that happens, can they even deliver this metal?
That's the big question, Rob. Can they? I don't know the answer to that. I suspect not in some cases. I think if you're big, the big fund managers, I won't name names, many of them are extremely well recognized. I mean, they go into the GLD, which is a proxy for gold. But if they went into gold, which would be my recommendation, you'd really start to see some splintering in the market between those that know what gold is and those that know what gold can do. Having gold is a lot different than having a proxy on gold.
Yeah, and one thing we haven't talked about, we're here with thousands of companies, literally. You see the equities markets. Haven't really got the participation, maybe some of the mid-level guys, upper guys, but the lower level equities haven't. Will they have their day, or it's a different market?
Yeah, you're talking specifically the resource sector, basically the gold stocks, the low level, the mid-level, the top level. Yeah, they haven't participated as much, and a couple things to comment on there. Number one is usually the shares will signal ahead what's in store for the metals. So in other words, if the shares are outperforming the metal substantially, like a 3-to-1 ratio where gold goes up 3%, the shares are up 10%, that's a signal that gold's going higher. If the shares aren't participating, that's usually a signal that gold is overextending and coming back, which is what we saw Friday, but that's only one day, and I'm famous for saying one day doesn't make a market. So we'll have to wait and see, as I said earlier. But I do think in a bigger scheme of things, as I just went over, that you'll see all these shares participate, and at the end of the cycle, which could be 3-4 years from now, I'm guessing, don't know, then you'll see the small companies really accelerate. You got to remember back when the cycle started, in 2000 roughly, I mean, just about any, as Rick Rule likes to say, amalgamated moose pasture, this penny stock gold company that's looking for gold in moose pasture. I mean, it never found anything but moose pasture, but that stock went from 10 cents to $1 because they were looking for gold. And it had gold, in their mission statement. And this is kind of a feeding frenzy that takes place. That'll happen again at the end, I believe. There'll be people that are late to the market. They'll be looking for the cheapest stock they can find that's looking for gold or looking for silver or looking for palladium or whatever. And these stocks will be bid up because they're such teeny micro cap stocks. The whole company's worth, $5 million. And for that company to be worth $50 million isn't a lot of money. It might be for an individual, but as far as the marketplace is concerned, it's nothing. So you can see these stocks really flying. I think that will take place.
So final word here. You gave a lot of ammo, the reasons that the metal should go higher, markets in turmoil. What's your parting advice for investors here?
I think really don't get over anxious. You can agree with me, but timing's always difficult. I've certainly missed the timing a few times. I admit that. But I think, one, you got to build it into your portfolio. I think it's a go-to asset. Don't overload. I mean, there's a balance in everything. And don't be over anxious. You don't want to load up one day and watch the market go down 30%, a year later. Then you really feel stuck. So you might consider dollar cost averaging or let the market prove itself. I mean, in my membership base, I pretty much don't tell the market what to do. I let the market decide. So I might do an interview like this and give a projection, and it doesn't come true. But for my member base, I say, here's the line, the line in the sand, so to speak. I don't use that metaphor when I do my updates, but here it is. Once it goes through that, wait 3 days. If it's still done on good size volume, volume is at this level, it's done at 3 days, then and only then should you participate in the market. So I'm very disciplined when it comes to my paid subscriber base. As far as a general interview, I'm trying to paint a big picture. I'm trying to put everything. Everyone wants to know when. You do the best you can. I mean, I'm just a human being like everybody else, but when it comes to actually trading, pretty efficient on that. We were up about 60% on our top tiers last year. I had 7 stocks and every one of them was up. There aren't too many people in the industry that can make that statement, and I can. So, it's been a good year last year for us, and I think we're going to have an equal to or better than year this year, Rob.
Yeah, and tell everyone this, obviously, getting advice from a guy like you is important, especially in these markets. So tell everyone how to follow you and how to sign up for your service.
Yeah, the best thing to do is just go to themorganreport.com and get on our free email list. This Thursday, which is just a few days from now, I'll be doing a free webinar on my favorite way to participate in the PGMs, the Platinum Group Metals. And I'll have a CEO of a company that I do own shares in. Full disclaimer. I'll say that at the beginning of the interview. And you actually get the name of this company, which most people are unaware of. And they're also unaware of the situation that we'll be describing on how to participate in this run-up in palladium. And what I think is probably one of the best and safest ways to participate at these high levels.
Okay, that's David Morgan, Morgan Report. StockPulse on location, PDAC 2020. Thanks for the time, David.
Welcome.